All right, hey, what's up, y'all? We are going to go over Apple on April 14th. It happened this past week. Some things that were said over the weekend that administration released clarification of exceptions to the reciprocal tariff plans. Exempted items included semiconductors, smartphones, computer, SD card, and flat screen TVs. Also, there might be a semiconductor tariff in a month or two. And today, Meta began its antitrust trial today. But today, I will be looking at Apple because I think it offers the most opportunity. We have a gap up of 6.7%, which is pretty big in a mega cap. We are still below the 200 MA and we are below the declining 50 MA. This right here, I think it's an overextension. I think that we do have resistance at the 50. We also have resistance at the after hour high or the opening overnight at 215. I don't think this can go up much any longer. By the time we hit 220s, we're going to face our first major resistance. I am prepared though to take this or look for a pattern past 215 to the upside, or because we have such a clear level on the pre-market low, I'm looking for a break below that and for my pattern to form. So I think the odds are more in my favor for a gap up reversal type of play, like a gap up sell off. And as we can see with the news, it's pretty big. We have a geopolitical catalyst underway. It affects the whole trade tariff war thing that's been going on. So, how much risk does this idea deserve and why? I think with this major catalyst and the big volatility, as we can see with the gap up, I think this deserves at least 50% daily stop and a little more how the intraday sets up. If we get a clean pattern, orderly price action, burst of strength or weakness, I am looking to add additional size. What do I want to see in the intraday? I think the levels for me are the overnight session high and the pre-market low. I do like the risk reward more to the downside, but let's go ahead and see how this plays out. All right, so before I get into it, I will be using AAPD. And here's my reasoning. First, I have generally a small account in the 2000s or the 20,000s. And if I get really tight risk to reward on something like Apple, it's going to eat a lot of my buying power, as well as since I have, since I'm more leaning on the short biased idea, I cannot short with my account and I can long only. And AAPD, the inverse ETF for Apple, is a great option. Usually on days with like big volatility, we do get to see more volume in this ticker. And so it's not really a liquid. Plus, you can play it on the long side. So those are my main two reasonings for playing this. So everything I say is just the inverse to the Apple chart. And we are just opening up, and I'm going to explain a little bit of my momentum strategy. In real time, I have multiple time frames up. This just helps me confirm uh, just the overall sentiment and see the higher time frame on the intraday as well. But on each time frame, I am looking for that one particular pattern. I'm looking for a big move up, followed by an inside bar on lower volume than the first bar, and I'm looking for a break of that, risking the previous bar lows. So I'm looking for the break of bar number two's highs, risking bar number two's lows. So as you can see, we did close within range, but we didn't have the relative highs on the 5 minute, so that was a pass. Plus, the main thing is that it didn't break pre-market high, which would be Apple's lows, which we are getting right now. Let's go ahead and look at Apple. And I forgot that the Apple chart is skewed on Trading Sim. But if we look here on the right chart, we can see the clear level at 206.70. And that is a level that we broke. And now we're seeing if we can go farther down. So as you can see, we got the break of pre-market highs and we are setting up a 15-minute 3-bar play. What my plan would be here is simple. Entry above this bar, stop below this bar. We have relative highs. We have the igniting volume on the bar number 1, and we're seeing that low volume on bar number 2. Let's go ahead and set this up for the 3-minute. So I'll be looking at, let's see. All right, so right here, if we look at the pattern, I think the flagpole is pretty nice. The buyer stepped up. I think we're seeing tight bars, good pullback to the 90 MA, still above it. And given the intraday, my plan and possibly the overall idea that longs could be trapped here, buying into the news from the tariff exemptions. I think this first entry deserves at least 76, more than 75%. I'm willing to put half my account in this for 625 shares. Set my buy order. Let's see if it gets triggered. So I really like the intraday. As you can see on the 5-minute, it's nice and orderly. Same with the 10-minute. We're just closing within this range. The 1750s to 1740s. We have a test of the 9 EMA, closed below it, but we couldn't break below that bar. Right there, I got triggered in. So we can see on the 15-minute, what is this? Delete. I'm going to be risking off 1740. And right here, before this candle closes, I want to slow this down. From my last video on my SOXS trade, I had an opportunity where it broke highs and it set up my 3-bar pattern again. So right now I am looking to add buying the break of this bar, risking the previous bar lows, which lines up with my break even for the first trade. So let me do the math real quick. All right, so since I'm $100 size on this first entry and I want to go maybe $40 on this next, and it's going to cost another 7,000 to buy. But I really like this idea. I really like the pattern. So far, everything looks clean. Let's go ahead and play it out. I need to wait for this candle to close first. It closed and I just set my buy order. And this is really tight risk on the second entry. I'm looking to trail it with the 9 EMA. Hold on a second. We got triggered right there. So now I have 1,069 shares. I am bringing it up to break even on the first trade. All right, so how I am looking to trade this. I'm looking to trail with the 9 EMA, or I'm looking to take some off into volume extension or price extension from the 9 EMA. Usually that takes about 2-3 wide candle bars to get like that. But right now, while I see that I did add in this position, I am not getting follow through. I mean, the second bar after the breakout tested that level again, and I'm pretty much a little underwater on my position. I would say it's hovering back and forth. This is something I do not want to see because this is when you start to panic. You feel the emotions. Your trade idea is not working right away, and you are supersized in. Granted, I'm not going to take a big loss, but I just really want this idea to work. All right, we tried to break to highs, no dice. Let's go ahead and look at what the Qs are doing. Seems like the Qs are just choppy, consolidating in and out of VWAP. We want to see the Qs be trending downwards to help with our Apple short idea. And we are just consolidating at that new high of break. And it looks like I might be getting stopped out here. Still in the trade. Yep. And I just got tagged out there. It's a shitty feeling. But what is important, and from the lesson that I took from the previous trade, is to look for a re entry opportunity, especially that price is tight and it's still, holding that moving average. That's the 21 and it's rising. Let's go ahead and draw another trend line here. All right, so pretty much we got stopped out of our full size. For this re-entry, I'm pretty much keeping it simple, and I am looking to buy the break of this high, risking the break of the previous bar lows from this pattern. And we are still in a really tight range. I'm only going to be entering my ad size because it seems like the higher time frame, or the quote unquote the 15-minute, just didn't work for this. But so far, I mean, everything's looking orderly on the 5, the 10, the 15. Let's go ahead and zoom this up. Put a buy. Oh, and we actually took out that. All right, I got filled right there. So it looks like we took out the previous pattern's high, and we're risking the previous pattern's low. We still have both EMA support. Right away, price rejects off that level again. It actually looks like it's going to stop me out again. I forgot to put my stop. But so far what I'm noticing is that we're still not able to close below the MAs. So I kind of have that as the first line of defense. And we are going higher, which is great news. All right, so here we broke to new high of days. Seems like we are rejecting. Let's go ahead and take a look at Apple. We are breaking low of day. I mean, AAPD just mimics Apple, just inversely. We are testing that level again. At this point, I believe, we did hit 1R. Price is coming down. I want to protect my stop, or I want to protect my risk. So right now, the trade is break even. That new high a day pop was enough validation for me to be like, okay, if this fails the new high of day, then it's probably going to go back down and stop me out unless it finds support on these rising moving averages, which is what we are seeing right now. Price went again close to my break even level, testing it, but just getting bought right back up above the moving averages. And here we go, breaking to new highs again. To maybe try to understand how this works on Apple, perhaps we could see quote unquote dip buyers down here, and the buyers are still trying to step up, but we just have a lot of sellers, and you can tell that this news is not acting accordingly, or the market priced in the big 6% gap up. So right now my job is to look for a close below the 9 EMA and a break below that bar. It is to look for volume exhaustion, either in Apple or perhaps the Qs. And if price gets very extended from the 9 EMA, kind of like what it's doing right now. Let's check the Qs. Qs, no significant volume. Apple's not really extended. Just got to continue to trail this one. And right here, we do have the close below the 9 EMA. Forgot to set my stop there, but I just did. See if it'll trigger me out. Now, keep in mind, I would have got, yeah. All right. So I did get stopped there. All right. So far, that was kind of a tough trade. Let's look at the analytics. And we are walking away with a $80 gain. Whole time was about 2 hours. We didn't have decent size on it because we got shook out of our first entry. Seems like we only pulled a 20-cent move from this. Overall, I really like the idea. Um, I just don't think we were able to capitalize it based on our management. But this is a great example of the signs to look for when considering a reentry. Sometimes we do get stopped out and it continues to fail. There are times where we get stopped out and it does price action like this and you re-enter and it fails again. That's why I think with these type of riskier trades for me right now, it's important to keep the ad size on and not the original full size, because then it would just sting. By your third stop out, you're just like, why am I risking such big size still when price wasn't going according to how I thought it was going to go? But I think this is a really realistic example. This is a trade where I went full size. I took a little loss because I lost on my ad while hitting break even on my first trade, and finding the courage, but also looking for the clues in the price action for a reason to re-enter, why the momentum is still going to continue. Moving averages are a great guide. They are a lagging indicator, but sometimes when you incorporate it with the overall price action, you tend to get better clues, I guess. And yeah, we still walked away for a decent win. I mean, pretty decent. Not the best, not like the other trades I've been reviewing, but these are the type of trades that happen a lot. And, with a week like we had last week where there wasn't a lot of volatility, this and maybe one other play was according to my playbook. So there wasn't a lot of options out there. So it's important to, be diligent and stick to the clean moves and just be patient and avoiding the noise. But this re-entry possibility was really interesting. And what I find more interesting was that other socks trade I did had the similar setup. Wasn't necessarily on the 3 minute, it was on a higher time frame. I think and I think it was on the 10 minute, but the concept was the same. The price action fell within this level that I drew for my pattern and broke out and made the move that it wanted to. But yeah, this was I try to make this video shorter. Like I said, I think it's best to watch this at 1.25. I don't even know if I'm going to put music in the back cuz all my videos are being copyrighted. It's driving me insane. I just need to find some chill lo-fi beats to put in the background. But yeah, that pretty much sums up the Apple idea for April 14th. We had a strong catalyst for this, so that's why I was really focused on this for that day. But thanks for watching, y'all.